Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps that were in play on Friday and last week. And so first up we're going to look at ticker symbol ANY. So NE closed up 33%. So a very nice move on Friday. So what we've been looking at here is this 200-day simple moving average. This is a chart that we've been working on in the chat. 200-day simple moving average at 555. As you can see here, it closed at 559 on Friday. So it closed just above that key level. So on Monday, what it needs to do is stay above that 200-day simple moving average. If that holds, then the bottom of this gap will be the next key level to break. It looks like this gap's off a little bit here. Yeah, the top of the gap was actually high of day from Thursday. You can see the upper wick on this candle hit that high of day and hit this bottom of this gap over here. So there's a gap between low of day on this candle and high of day on this candle, and so the gap did fill here on Thursday. So now the key levels to do for next week are stay above 555, above the 200-day simple moving average, then break above the $7 top of gap resistance zone. If it can break above 7 and turn it into support, the 300-day simple moving average at 1054 will be the next target. Now, if it drops below 555, that would be a red flag. It has to be above the 200-day simple moving average, and you'll know it's not ready to head higher if it drops below EMA 4 at 471. A drop below EMA 4 would signal consolidation. Check out the big volume behind this push. So nice move for ANY. We'll see if it'll follow through next week. Let's look at CRMD. So yeah, this was a really nice play last week. Yeah, the markets have been under huge pressure. And yeah, lots of stocks were down last week, just getting pummeled. But if you, a lot of times small caps can move when the large caps are under pressure, and so you just have to pick the right stocks. And so there's always a few good plays out there, and CRMD was one of the good plays from last week. Base hits add up, 12.6% gain. That's not bad when the market's down and under pressure. Okay, so you have RSI at 55, lots of room to run on Fasto. They're both below the overbought levels and in the bull zone. You can see here ADX, the green line's above the red and black line. So everything's really heating up on this chart. This chart was made on this day on the 19th. And so yeah, if you were in our chat, you would have caught this in our premium chat. And then people were loading on this break back above the middle Bollinger Band and the green line, which is the 50-day simple moving average. Those levels did hold last week and it pushed higher. And so that was really sweet. I'll take a base hit when the market is under big pressure. And so now the big level to break is going to be this high close resistance level, the closing price on November 5th. If it can get above that level, then 155 zone will be the next target. What you're looking for here is a break through that upper Bollinger Band at 143, a push through 150, that 155 resistance zone, and then possibly working back up to this 225 high close resistance zone, maybe 227 or so from back here in October. So as long as the middle Bollinger Band and 50-day simple moving average in this 117 support zone are holding, this new uptrend is intact and it should continue. Okay, let's look at our RGSE. This is another one of our plays that just kept delivering. And so yeah, we were on this very early, and yeah, it's been holding support and keeps pushing higher. The key is to stick with the trade as long as support doesn't break, and RGSE is a perfect example. Closed up 14%. Now you have to keep an eye on it here. We have RSI now at 74, so it is getting frothy. Now it's above that overbought level. You have Fasto at 95. It's been on a sweet multi-day run. Yeah, this chart was made back here. Let's see, this was the chart because we'd been updating this since this day. This was the first day that it caught our attention. That's when this chart was made. When it broke intraday above that gold line, that's the 100-day simple moving average. Now that day, back in the first week of November, it failed to close above that level and it pulled back. And then it was the close back above the middle Bollinger Band here on this white candle that signaled it was ready to head higher. And so we put out more alerts on that day. And then it was this big move right here, that close above high close resistance here on August 28th, this white candle here on the 13th, that signaled that it was ready to keep pushing higher. And so it just keeps following through. And so why have we been sticking with the trade? Well, look how since this day right here on this white candle above the 100-day simple moving average. Every single one of these candles that have followed have closed above EMA 4 at 57. Look how every single one of those closes above that level. As long as that level's holding, the signal's just to keep riding. So for the last couple of weeks, we've just been riding the swing trade higher. There hasn't been a sell signal yet. Once it drops below that 57 level, that'll be a signal to lock in some gains and look for potential reload lower level, or reload at a lower level. Okay, and so if that 57 EMA 4 support level holds, the next target's going to be that 200-day simple moving average at 71. If it fails to break that level when tested, that could signal a temporary top. Notice down here on this climax spike, we totally called this climax spike here. Notice the pattern, and so it did pull back after that. If you look here at RGSE, you can see here on the 13th, so we were on this. This is the premium chat here, and you can see we were on RGSE back here on the 6th. When it came when it was breaking above resistance here, it was heating up, and we were looking for it to possibly get this new uptrend going, and then let's see here, and then we were on it actually before that. You could see we were on it on the 5th. And then, actually we were even on it on, we've had a lot of talk on this on the 4th. I put out multiple videos. I mean, as you can see, we were on this at the very start of the run, right? And so if you look here at the, okay, so then I put out the video on the 11th that it was heating up, and then if you go here to the 13th, which I was just showing you, that's when it started breaking out higher. You could see how it followed through here and started pushing higher, and then we were looking for a break above that level. That did happen. You can see here. And then we had another yesterday. We put out another alert that it's pushing higher, and then put out the alerts that the next levels that it's likely to stall out at. And so so as you can see, we've been on RGSE all the way through, and if you are in the premium chat, you will get these kinds of updates and alerts. Okay, so it pays to be in the premium chat. If you want to figure out when to exit RGSE, come join the premium chat, and we will let you know exactly the day and the time to lock in gains. Okay, let's look at EARS here. Okay, so this closed up 15%. So this is the move that we were looking for on Friday. We had been looking for last week, starting, this caught our eye on this candle. If you don't believe me, here. Then when you're in the chat, the premium chat, you just go up here in the search window and you type in the ticker symbol, and then when you type in the ticker symbol, look, you can find the technical analysis on that stock. This is a really good tool. The premium chat here is a service where I'm providing charts and TA and giving you alerts all through the day with support and resistance lines. So if you find this kind of information valuable, especially in this kind of market, then I would definitely join the premium chat. You can see here we were on this yesterday at when it was up pre-market, and if you look here on last Tuesday, see this caught our eye, like I said, last Tuesday, right at the open when it was breaking above the middle Bollinger Band. See how we were on it on the first day? And that was on this day right here, and then it ended up consolidating on Thursday or on Wednesday, and then Thursday was off, and then Friday it closed above the middle Bollinger Band. That was the move that we were looking for. So if you were in the chat and you were loading on this first day, you had a nice day to either lock in some gains or keep riding on Friday. And so the strategy now, as long as this middle Bollinger Band at 68 support holds, and that green line, the 50-day simple moving average at 64 holds, this new uptrend should continue. And what you're looking for is a retrace back up to that 200-day simple moving average at 107. You can see that's where it topped out at back in October. And then the big resistance level to break is going to be this 95 resistance zone in order to get to that 200-day simple moving average. Notice how volume is picking up. Now this is only going to be in play if that middle Bollinger Band and 50-day simple moving average support levels hold. Okay, take a look at TIS. So this is had that big gap up open with the black candle. Okay, so let's take a look. What did I say on TIS on Friday? Oh, yesterday. You want to check it out? What do we say here? So so this was a great play to load if you loaded on Wednesday or pre-market, but now it's forming a black candle, and with the big black candle and the big gap up open, the signal was to lock in gains. That was at 167. Let's see, where did it end up closing? It ended up closing down here at 180. And so yeah, the strategy here on this, when you get the black candle forming, many times it signals that it could consolidate further. And right now, what it needs to do is, you can see after that alert, it came down there and tested that middle Bollinger Band, and so it needs to hold the middle Bollinger Band at 149. If that level holds, it could get a new uptrend going. Now, if it drops below 149, that's going to signal downside risk. That's what it did last time. If you look here in November, it closed above the dotted purple line. It failed to hold, and the downtrend continued. So a drop below that 149 would be a major red flag. You do not want to be long. See what happened back here? It closed below the middle Bollinger Band, and look at that nasty downtrend. So just warning you right now, if you hold this thing and it closes below the middle Bollinger Band, you are going to get brutalized. And so there is an unfilled gap down here between these two candles, and on a pullback, this gap is likely to fill. So keep that in mind. It could drop down there to 118 and fill that gap. Now, okay, it's not all gloom and doom. It is above the middle Bollinger Band, and it could push higher. I do hate black candles. Why do I hate black candles? Why do I have bad feelings every time I get this black candle formation after a big gap up open? And why? Well, check out accumulation distribution down here. Look what's going on. Why do I hate the black candle? Because the company just dumped a whole bunch of shares. I mean, look at accumulation distribution, a huge spike down. Look at shaken money flow, a huge spike down. Why is it spiking down when the share price is up 164%? Because the company just dumped a whole bunch of shares. Bad companies like TIS, look at this nasty downtrend with super low average daily volume. Look how low the average daily volume. They can never get any volume going. So what do? When they do get volume, they use that as a way to dump a whole bunch of shares in order to pay the bills and keep the lights on for their crappy operation that they have going. Because if this was a good stock, it would have a nice uptrend. And so the bottom line is this company is a mad diluter, and if you get caught holding the bag too long, you will get burned. Now to the upside, how can it break out higher? It has to break the green line. Next week, if it trades above that 50-day simple moving average at 233 and closes above that level, that will signal upside potential, and you could get a run to that 100-day simple moving average at 288. Fail to break that 50-day simple moving average, that will be a red flag, and that middle Bollinger Band will be retested. Okay, take a look at MICT. Keep an eye on this thinly traded penny stock. It was up 39% on Friday. RSI is now above oversold levels. Fasto's above oversold. You're starting to get a bull cross here on ADX. Notice how the green line's starting to cross the red line. So all that sounds great. Just it has a nasty upper wick. Look at the upper wick on the candle. This is just like TIS, except for it didn't form the black candle. But this black candle right here represents dilution. The company's selling shares. Well, that's the same thing with this long upper wick. When it hit up here near 90, they started dumping, and they drove the share price all the way back. Dropping below this middle Bollinger Band at 73 intraday was a sell signal. Holding on that drop below was not a good call. Okay, so once above that middle Bollinger Band, it needs to stay above. Why do you not want to be holding when it drops below? Well, look what happens when the candles are below the middle Bollinger Band. The stock heads lower. So it was only going to be a good play if it stayed above 73. Now this gap filled. There was a gap between low of day on this candle and high of day on this candle. You could see the gap filled. Once there's an upward gap fill, the share price has to stay above the upper gap, the top of the gap. If it fails to stay above the top of the gap, that's another sell signal. So if you didn't sell at 73, you should have sold it when the EMA 13 and the top of the gap broke. When both of those broke, if you didn't sell, you should have sold when EMA 8 broke. And now it came all the way down to EMA 4. And so that's the last line of defense. If it drops below 53, that's going to signal downside risk, and it's going to continue lower. Now this could head higher, and they could push it higher. And so the only way it's going to do that is if it closes above EMA 8. Notice how there hasn't been a close above EMA 8 since way back here in October on this white candle. And so a close above that level would be a bullish change in trend. Once again, the key with these small caps is look at the average daily volume. Look how low the average daily volume is, okay? When you see that the average daily volume is very low and then you get a giant volume spike, look how this volume spike is like 10, 10, 20 times the average. The average daily volume is probably like 100,000 shares for the stock, and it traded over 2 million. That is a major red flag when you start getting the upper wick. That shows that they're diluting. Okay, you can't. These penny stocks are just trading vehicles, right? These are short-term dates. You jump in them when the party's happening, when things are going good, and then once the date start giving you trouble, you freaking dump it and you move on to the next one. Do not get attached to these freaking crappy penny stocks. They will leave you heartbroken and burnt in the end. And so the key is to lock in gains when they are on the table. Okay, follow the charts. Check out LENS here. Closed up 34%. Another thinly traded stock. Only 34,000 shares traded. So yeah, this is a risky play due to its very, very low average daily volume. Look at the average daily volume, super low. Now volume has picked up down here, and so that makes it a little more interesting because we've got some volume now. And so it did close above our key level on Friday, and that's why I put it in the video. It closed above 81. If that middle Bollinger Band at 81 holds, a new uptrend could begin. Notice how these candles here were trying to get above the middle Bollinger Band and they failed. The last close above the middle Bollinger Band was on this white candle here on the 8th of November, and that level failed to hold and the downtrend continued. That's exactly what will happen again. If it closes back below the lower Bollinger Band or the middle Bollinger Band, you're going to see downside risk and it'll probably drop back down to 60. If that 81 support level holds, a new uptrend could begin, and the key level of the break is going to be this upper Bollinger Band at 104. Notice how it's lined up with the high close there on the 8th. And then if it could break above that level, you're looking for a run up to that 50-day simple moving average at 123. Okay, so let's take a look at ABIL. Okay, everybody was in love with this stock on Wednesday. Oh my gosh, it was the best thing that ever happened to the stock market, according to some people. At least it sure seemed like it. They were getting super excited about how this sucker was running. Well, while they were getting excited, I was getting worried. I was getting concerned. I was getting nervous for my fellow chat members because I hate to see people lose money, and I knew this was going to be a slaughterhouse once this finished. How did I know this was going to be a slaughterhouse once they got done with their big pump and dump? Well, I looked at the average daily volume. Look how low the average daily volume. There's no freaking volume. What happens when there is volume? Well, let's take a look. Volume spike, white candle. What happens the next day? Red candle, big gap down, brutalized. Okay, there was a little volume spike here. What happened? Pullback, red candle. Oh, there's another little volume spike over here. White candle, upper wick, red candle. Okay, so the pattern is when you get a volume spike, even though some of these are small, and you get a white candle with a long upper wick, it's usually followed by a red candle. Okay, what happened on Friday? Brutalized. You were freaking destroyed if you held this freaking garbage overnight. Look at that. White candle, right? Look at the next day. Brutal gap down open. Look at how low the volume was. The volume just dried up. These are like bag holders there that forgot to sell on Wednesday. I put out lots of alerts in the chat to dump this garbage before the close, and yeah, people were very excited that it was running up to $8 and really pushing. Let's take a look at the breakdown. Yesterday, you know, I posted how this was the top loser of the day. Check out how I said on Wednesday that this wasn't the type of stock that you want to hold overnight after a big run. I warned our chat members to exit before the close, and check out ABIL, top loser, down 45%. Okay, so that was not good. If you look here at the ABIL yesterday, as I said, it got destroyed. It wasn't the kind of stock that you wanted to hold overnight. You know, the lesson is don't hold low average daily volume parabolic runners overnight or when the 15-minute chart breaks down and turns bearish. Okay, this is on, if you go back here to Wednesday, you can see, yeah, I just want to show you here. I put out these alerts on Wednesday. If you like this kind of stuff and you think this can help you with your trading, you should pay the freaking $15 to $20 a month to get these alerts. They can save you and help make you so much money, okay? Especially if you were a bag holder and you got burned on ABIL. If ABIL drops below 7, it will be a red flag since it's such a big resistance level on the weekly chart, okay? So it was, once it dropped back below 7, that was a sell signal. Okay, if you look here at ABIL, okay, okay, so it was running, forming a, it was breaking out, hitting these high levels, and yeah, if you go right here, this was the Wednesday post that if you look down here, okay, so I put out the warning at the end. Okay, this is the type of stock that brutalizes you for holding overnight. It could work out this time, but you're playing with fire. If you read through this, I give a little strategy, and I talk about how you want to exit when it drops back below that 400-day simple moving average. Okay, when you want to when the 15-minute chart starts breaking down for parabolic runners, you want to exit. Okay, so when EMA 4 on the 15-minute chart here, once that broke, that was your big clue that the share price was breaking down. Okay, and so where can we look at it right here? Well, let's take a look at the 15-minute chart. So I was really concerned about people losing money on the stock because I knew it was going to be a big sell-off coming up on Friday. And so if you notice here, the candles were above EMA 4. They were running super hard. And then this candle right here at 12:45, that signaled downside risk. It closed below EMA 4 for the first time. That was your signal to lock in gains, right? And so it came down here. It bounced, it held support. If you did not lock in gains right there on that breakdown, and you were able to get out in the $7 to $8 range, then this break right here was your clue. Okay, so this red candle right here at 3:15, it broke below the middle Bollinger Band. This was going to be a risk to hold overnight if it stayed if it was closing below the middle Bollinger Band. You did not want to hold. For parabolic runners like this, look at the average daily volume before. No volume at all. The volume was going to dry up after this big parabolic spike. So the key was to lock in gains before the close. You do not want to swing trade this type of chart. If you have a type of account where you have to hold overnight, you do not want to trade a kind of stock that's going to be down big the next day, that has low average daily volume, that has the big volume spike, and that's set up for a gap down open. And so what happened on Friday? Look at the open way down here at 342. So anybody that held up here around 560 on that close, they got brutalized the next day. And then look how the volume dried up. There was no volume, and it just held support down there. So the lesson to the moral to the whole story here is, if you're going to trade crappy stocks like ABIL that have parabolic runs, when the upper wick forms on the candle like this, that's your signal to lock in gains. And so we try to lock in gains on the high of day upper wick, right, when it starts pulling back from high of day, and then we look for that break below EMA 4 as the next signal to lock in gains. So you try to time the high of day off the upper wick, and then once EMA 4 breaks down, you head to the sidelines. Don't mess around with parabolic runners. If you do, this could happen to you. You could lose half your money overnight. So yeah, you're playing with fire when you're playing with stocks like ABIL. If you'd like to learn more about trading these types of stocks, and when to enter, when to exit, and strategy, please come check out the chat. So it's even more important now that the market is so fragile and stocks are being sold off so quickly, that you capitalize on your knowledge of technical analysis and lock in gains when they're on the table, and exit when danger is signaling. And so this was danger right here on this candle. It signaled downside risk. Okay, yeah, just trying to do my best to help everyone. Help me by coming to the chat and joining the premium chat. That would be really good to have you there. We're looking forward to seeing you there soon. All right, thank you.